Hey, how's it going? Sunny Chris here, your lender in sneakers with American Pacific Mortgage San Diego. Currently still self-quarantining. I hope everybody is staying safe, staying healthy, practicing social distancing so that we can all go back to normal. Obviously, that being a big question mark. But today is Monday, April 6th, 2020, and welcome to your Monday Mortgage Market Update, where I share with you the latest headlines that are affecting the mortgage industry, also as well what is happening with interest rates. So let's go hop right into it. Don't want to take up too much of your guys' time here. So there's two articles I want to share with you guys from Housing Wire that I think that are very prominent as far as to what's happening in the mortgage industry and the type of loans that are being offered during the crisis. So one of them being, and I'm going to link these articles to the original post so you can read them in detail if you really want to. But the article actually says, or the headline says, mortgage lenders are tightening up standards as coronavirus crisis worsens. And it actually goes very into detail of the overlays that are being implemented with the loan programs that are being offered today. And all that is response to the economic impact that is happening with the coronavirus. Obviously, I think it was like a week or 2 weeks ago, the unemployment numbers came in and was way over expectation, and they're forecasting that number to continue to grow because of all the business shutdowns. The expectation was 1 million for a first-time filing of unemployment, and that actually came in at 3 million. So got blown out the water. And in response to that, and also in response to the investors being very weary of the type of loans that they take in, a lot of these direct lenders, mortgage bankers are tightening up their guidelines to establish the ability to repay so that they can be able to sell these loans off their balance sheet so they can continue to originate. So there's going to be a lot more of restrictions or additional guidelines for verification of employment to make sure that you still have the continuance of your income coming in. And one big change that I can share with you guys right now is essentially the FHA mortgage. It's very, very known for a very low barrier, or I guess a very low FICO score for you to qualify to purchase a home with an FHA loan. The minimum was at 580, and now some lenders are raising them up to 680, 640, and that's a huge gap there from 580 to 640, which just makes sense as far as the psychology of why they're doing that, because a lot of these closures, a lot of these people out the job more than likely fall within that FICO score range, and if they can't pay the mortgage, then we shouldn't be originating those mortgages. I hope that makes sense. And if you want to see the exact details of the type of overlays that are happening, this is a very good article. I'll link it to the post. One other huge topic right now is this particular headline says PennyMac warns mortgage originators that forbearance buybacks could be coming. Essentially, what they're saying is PennyMac's one of the biggest mortgage aggregators, where essentially, you know, a bank like American Pacific Mortgage and these other direct lenders here, sometimes, depending on our portfolio, we don't retain the loan for servicing. We sell it off to a mortgage aggregator like PennyMac in order for us to continue to offer competitive rates. Because you think about mortgage servicing, the amount of people that it takes, the amount of overhead, sometimes that can affect the pricing for originators. So what we do is we sell it off to mortgage aggregators like PennyMac. But now with the unemployment rate and what's happening in the economic times and the language that's coming from the federal government here, it's kind of, they're kind of promoting people to take advantage of forbearance plans, almost promoting it as if it were a free meal. And I can guarantee you guys that it's not a free meal. These aren't skipped payments. These aren't deferred payments. You're going to still have to make the payment somehow, or if you can't make those payments as far as the ones that you skipped, you're probably going to end up modifying your loan modification. And if then you can't afford your loan modification, you might be entering into a situation where you have to foreclose on the home or short sale your home. Luckily, we're living in unprecedented times here where a lot of people are sitting on a good amount of equity, and we haven't seen prices take a hit so far in what's happening economically. So there's a lot more solutions out there for you. And if you want to find out more solutions or you have any more questions, I would love to be a resource. But definitely, if you're thinking about forbearance, only use it if you need it. And I'm very comfortable with recommending that 100% at this point as far as the literature that I've read so far. If you can still make your mortgage payment, you'd be in a better position to continue to make your mortgage payment. But if you need the assistance, especially during this time, and you have a loss of income and you've been affected by, the coronavirus economically, definitely reach out to your servicer, which is the company that you're making mortgage payments to, and come up with a solution. And hopefully, things don't have to stay how they are right now for too long. So that's kind of the lines that are happening right now, mortgage forbearances, and also tightening of lending guidelines for people to qualify for mortgages right now, especially during this recession. Huge changes happening. So definitely, if you have questions about that, would love to share any more insight with you. But let's hop into mortgage-backed securities, and I'll show you exactly how that's affecting interest rates. So actually mortgage rates did drop. So I'm gonna say that right now, mortgage rates have dropped. So I was definitely wrong in my last video. But one thing that's happening right now is that we have hit a range. It's starting to stabilize, which is a good thing. So now that it's stabilizing the mortgage-backed security, you can start seeing lenders offer more competitive rates. Maybe not quite right now, but in the coming weeks. The biggest thing that happened in these past 30 days was this big price increase with the mortgage-backed security, and it put a lot of lenders in a very bad position where they had to stem any new business coming in. And the only way for them to stem any new business from coming in was for them to increase their interest rates or increase the cost of the interest rates that they were offering in the market. So in case you have, for all the realtors out there, in case you have any lenders that you're working with right now and they're a bit hesitant to share with you their actual true rates that they're offering, that this whole price jump is part of the reason why. If you want to know more, let me know. As far as Freddie Mac's primary mortgage market survey, it actually said April 2nd of last week, it actually dropped down to 3.33 for the conventional fixed 30-year mortgage. So it went from on March 19th to 3.65 to 3.5 on March 26th, then to 3.33, which is, it's good news. It's good news for anyone that's looking to buy right now, that rates are decreasing. And if you are considering buying and you have consistent income coming in, now might be a good time for you to consider that. But also do just keep in mind that these particular interest rates that are conjured up from the Freddie Mac primary mortgage market survey, this is a survey conducted by Freddie Mac, reaching out to different banks on what are they offering for people that are putting 20% down. I'll repeat that again, putting 20% down and 0.7 and paying points essentially to get that interest rate. So that's how you can interpret these interest rates that are being offered. 15 years at 2.8, a 5-1 ARM is at 3.4. And then looking at the progression of the 30-year fixed mortgage since the 26th, as you can see, went to 3.6 on the 26th, all the way up to 3.8 on April 1st. So there was a moment that it was increasing, but from April 1st to April 6th, actually dropped down to 3.4. So that's what's happening right now with the mortgage industry and interest rates. Hopefully you guys find this interesting. If you guys want access to any of this information, I'm going to leave the links in the post. Hopefully you found this update, today's update, Monday Mortgage Market Update, helpful. If you have any questions about mortgages, purchasing, or refinancing, would love to be a resource and kind of go through the different options with you, or even just create a budget. Thank you guys so much for your time. I'll see you on the next Monday Mortgage Market Update. Or if you're tuning in on Wednesdays, pay attention to or catch What's the Cost Wednesdays with me. Take care.